Now, this deflationary picture, it has now continued to deepen in China. This is the biggest drop in about 2 years for PPI, down 3.6%. Is China not worried about this?
Well, first of all, China today is not Japan yesterday. As your colleague Elaine has shown, for example, the bond prices, so on and so forth. A year ago, people were looking at long-term interest rate approaching zero. Today, that's not the case. So, big picture, China today is not Japan yesterday. Of course, deflation is very severe. It's a combination of overcapacity in certain sectors and a relatively benign domestic demand. And real estate picture remains unchanged. It's going to be a long-term consolidation that weighs on the demand for certain industrial sectors. Not to mention, geopolitical risk is making overcapacity in certain sectors more acute. So the question is, what should China do? I mean, short term, you cut interest rate. You also want to strike trade deals, for example, with the European Union, with other countries, so that you can export your overcapacity. In the medium term, long term, we need to adjust GDP growth rate so that you don't put so much pressure on growth.
Okay, now I'm going to get to the EU and making deals with other countries and, of course, the U.S. trade war in just a minute. But I do want to ask about the deflationary picture and the price war that is very evident in some sectors like the EV space. I just want to take note of some language that's being used by President Xi. He said that enterprises are, quote unquote, disorderly low price competition, and that needs to be regulated. Now, this reminds me of the same language that was used back in 2020 and 2021 when he was talking about disorderly expansion of capital as authorities targeted major tech firms for monopolistic practices and unchecked growth. And that was when they were clamping down on the competition or anti-competitive behavior of the likes of Alibaba and Tencent and the likes. Would we see anything similar in terms of regulatory action on the EV space or on some of these sectors with this oversupply?
Well, in the beginning of your program, you had talked about this IPO frenzy and a potential listing and a pipeline. For me, that's suggesting what has been done on tech sector has been reversed. So a lot of these companies, at least they are more than partially rehabilitated. So I think the comparison is misplaced. Now, in industrial sector, certain sectors, I think, is a genuine overcapacity. So, for example, steel, for example, cement. In some other sectors, EV, I'm not too sure, because some of the leaders in that sector, at least the capital market is still giving them benefit out.
Okay, as we talk about sectors and we look at the Chinese economy, I just want to bring to everybody's attention, we have some lines coming through from China's state planner saying that they expect the size of China's economy to exceed 140 trillion yuan this year, and that foreign tech curbs can only strengthen China's tech innovation and resolve on self-reliance. So this also brings me to the chip export curbs from the United States. Trump's Make America Great Again. Many are saying it's going to make China, make Hong Kong great. What do you think?
Well, I think the external pressure clearly is forcing China to develop its own capacity. That's what Li Qiang has been saying, whether it's in Davos or what has been quoted by you. And this year's growth, we think, is going to be 4.8%. So the growth target, I think, is very much in the bag this year. Now, you also have some silver lining on the trade front. For most Chinese companies, in the beginning of the year, I think they have penciled in something much worse, whether it's 50 or 55% tariff. And ultimately, I think the equilibrium tariff between China and the United States maybe will be 30 to 35%. Actually, that's not so bad for China.
How is the market, just in the last 2 days, how have they digested what has come through? So 14 countries have received letters. We've got tariff rates between 25 and 40% now. 7 more letters will be going out to the EU. China, we don't know yet, but Trump says he's had many phone calls with Xi Jinping and relations are good. What do you make of all this?
Well, first of all, this 10% reciprocal tariffs, I think it's going to stay for a very, very long time. That's for everyone, number one. And secondly, the tariffs being imposed on China during Trump 1.0, they are kind of being diluted. Consumers, exporters, importers. The other 20%, which is linked to fentanyl, I wouldn't take that too seriously. Then the question is, what will be the equilibrium level? There's going to be a very important vote in the Congress on PNTR, so-called most favored nation status. If that's being revoked, I don't think that's the case. That would be sending a very negative political signal. So I think in the end, it's going to be 30 to 35%. Now, that 30 to 35%, I think is a ceiling for other trading partners. That's why I think that explains maybe even lack of urgency of countries like Japan, Korea, even European Union. So most countries, they are just going to be, China is setting the ceiling, maybe UK is setting the floor. But we'll see. Other countries, they will try to strike a deal with the United States.
But setting the ceiling, we've heard 45%, and in some industries, we've got 200%.
Yes. There are two rates I think we need to pay attention. One is the headline, that's average tariff. But for companies, investors, I think they pay more attention to specific sectors. So, for example, I think tariffs on steel will be high. To quote President Trump, if there's no steel, there's no country. I think what has been done on copper, I think that's going to be sticky. But whether tariff on auto sector will be sticky, I'm skeptical. So I think it depends on sectors.
Do you think that various countries can work together as the supply chains continue to realign to counter or to counterbalance the Trump trade war?
Well, what has happened between U.S. and Vietnam a few days ago was quite interesting, right? So that 40% tariffs on export rerouting, that would discourage China's investment into Vietnam. But I do think most Chinese companies, they still look at this tariff arbitrage. So in the end, I think they will still use Southeast Asia as a main destination for rerouting.
Okay, bringing it back to China's moves to boost the economy. We had heard boosting consumption. One of the methods was by boosting the stock market, and we're seeing that the case today in the Hong Kong IPO market. We have 5 new listings, 2 of them A shares coming into the Hong Kong market. Is this an effective way to boost confidence, to bring and boost domestic consumption?
Well, China has to increase the percentage of direct financing. That's a capital market, right? There are over 10,000 private equity firms in China. Many companies are looking for exit. IPO is one of the very important vehicle for doing that. But ultimately, you need better earnings. Ultimately, you need a more liberalized economy. So I do think some of the policy reversals we have seen in certain sectors, and also DeepSeek moment in several sectors, I think have given investors much better confidence this year.